Hello and welcome to Macro Mondays, brought to you by David Gockstein. I am your host, Landy, and today is April 6th, 2026, and we're looking at Bitcoin to start today. We are looking at the daily. As I did mention last week and the week prior and the week prior to that, and really for the last month, now going to be probably about a month and a half here pretty soon. We hit target on oil to the upside and then pulled back. And what we saw was a little bit of a rotation into risk assets. This did have a positive impact early in the session yesterday for Bitcoin, that being the Monday session. It is a Tuesday candle now, still Monday for me, but Bitcoin essentially did lock in a higher low structure and has now put in a higher high swing, but it did not close the candle above the prior lower high to actually get the downtrend break on a closing basis here at 69.3 or so. But we did see early in the session, after oil hit the highs and the macro overhead resistance and then pulled back, Bitcoin and traditional markets did move up a bit. And that's when Bitcoin essentially came up to test in and around $70,000. So it did technically test the top side of resistance for this tighter range over here off of the initial lower high after putting in the lower low. So what are we looking for now in order to see some sort of a character change in Bitcoin? Well, this turned into a bit of a liquidity grab above the last lower high. And realistically, we have to see a close above 69.3. And now we would need to see price moving on past $70,000 to go and test 72, which is, right around the high over here at 72.2. We have the next lower high overhead. That would be a character change where likely if we started to see 72 to 72.2 break, we can start looking back up to 74 and possibly the zone between 74 and 76. Anywhere above there, I'd be looking 76 to 78 and then 78 to 80 for a direct retest of the prior lows that were lost that led to the $60,000 spike low. And then potentially, mid to low 80s, 82.5 to 83, and then 86K from there, which is a major weekly level. Now to the downside, if Bitcoin does close back below 68,330 or 332 in this case on spot, I would look at this as another higher high close, technically with a higher high swing, but not really a break of structure. It would be a technical higher high after a higher low. But again, conditions are clear for moving up into the overhead resistance here between 70 and 72. And then potentially further 70, 72 to 74, 74 to 76, so on and so forth. But if we do see a high put in, just beware of the last closing low, right around $66,900 to $67,000, and the swing low here, which is coming in at 65,696, so basically 65,700 or so. And then, of course, the bottom side of the range where the lower second is coming in right around $65,000. If we do see that break down, then that opens up the low side on expansion. And this low side support is going to be between 65 and 62.5. If we do see any closes below there, swings are fine. But if we see closes, if we haven't already gone down to test further, down into the low 60s, potentially 60,000 to 58,000, I would be looking for that on any closes below 62.5. Right, somewhere around 58 to 60. Of course, if that were to fall apart, then we have to entertain moves to 54 to 56, 55 being a key area down here in these two major weekly zones between, essentially, we have a wider zone between right around $56,000 and then 52.5, and then we have right around 54, 55K to 53.5. But this is a big zone. If that's lost, I'm looking at upper 40s, 48 to 50K being the next big area. So what does this look like on the weekly? Well, it looks ugly, quite frankly. But there is some potential here for both the bulls and the bears. Let's go ahead and get rid of the setup that I have here right at this very moment. And we can start talking about this weekly a little bit here. You can see that the lower second standard deviation on the weekly is now starting to push down below $58,000. It's at $57,000 even. Now, that does mean that a swing that can recover, a 58 to 60 swing that hits 57 but recovers back above 60 or so, perfectly in the cards. Anywhere below there, we really do have to entertain the mid 50s to low 50s. And that would be on expansion or re-expansion to the downside on any closes below 57 on the weekly. Now, we do have a lower high. That lower high is at $76,000. We essentially have equal lows here at right around 66K. If we do see a close back above 72, that would be essentially equal lows with a higher low swing. And if we were to see then $76,000 taken out, that would be essentially equal lows to a trend break on the weekly. While significant, there's still, really significant overhead resistance. In particular, right above in the most recent trend, we've got, $80,500 or $80,000, depending on your chart, to the close there at 86.8. And we even tested, of course, right to $86,000 below it, showing that, I think we closed slightly. No, we closed right on it at 86.5, but slightly below the 86.8. And then we retested right around 90,500 area before heading down. And this is where, even if we did see equal low setup to a trend break, we have to watch this low side structure because it needs to hold up, or else, it's just a deviation of this wider downtrend, likely leading to lower prices. But it would be a character change, at least in the near term for the weekly, if we did see something like that happen. Now, of course, as I mentioned, that's this is a lower high, so continuation of trend. We're looking for the lows 58 to 60. You can even rope in 57 to 60 there now by the lower second. If it is going to get below 58, though, I would look, 56 to 57, 54 to 56 area, right around there, right around the mid 50s. Even a spike below the lower second standard deviation. If it closes above, great, but it would need to recapture 60K in order to stave off further continuation to the downside. And that's kind of the lay of the land for Bitcoin right now. Let's go ahead and take a look at oil. And I mentioned this, a while ago now, but, I brought it up again last week. And that is beware of the overhead resistance, that 115 to 130 on WTI. And now we have a fractured market in terms of price structure for oil. One of the reasons why we're seeing oil in the U.S. trade over Brent, and even in some cases over, oil coming out of the Middle East, is because we have a lot of demand coming in for oil coming from the U.S. So with that increased export demand in this case, we are seeing higher prices. And that might actually start to bleed over to natural gas. It has not yet. A lot of that has to do with the time of year. And we'll see if that sustains. But, in this case, I don't think it's going to last too much longer if we do start to see, it won't last too much longer if we start to see the Strait open up. There was a good report, I forget who put it out there, but essentially they sent some undercover journalists over to the Middle East to actually get video evidence of what's going on in the Strait, and basically made the contention that the market is mispricing oil coming out of the Middle East because there actually is far more movement through the Strait than what the open source community and tools are showing. And that is basically essentially right what I was talking about in the very beginning of this conflict over there is you're getting ships that are turning off their transponders on one side, moving through the strait, turning them back on. And part of the reason why they're able to do this is because they are obtaining insurance, but because the insurance is at a higher rate, even though it's come down, it's still going to keep oil prices elevated until the strait is reopened in full, essentially, and publicly reopened, where you're seeing regular transit through the Strait of Hormuz. So the fractured oil market will remain intact. And right now it's driving prices up in the U.S. for U.S.-based oil because, well, the world wants that light sweet crude. So they are bidding it up, and speculators are also bidding it up as well. And in this case, I expect this to last for a little while, actually. Probably, I've estimated, and I don't usually get into this here, but I've estimated probably another 4 weeks or so from here. About 2 weeks ago, I was saying 4 to 6 weeks. I think we're probably in that 6-week window from when I said that. So that would put this at about 4 weeks. And I think we start seeing things, at least from a narrative perspective, start to wind down. And we're probably likely going to hear more news about shipping, becoming more of a the ease and pressure on shipping coming through the strait. So we'll see. We'll see how that potential actual prediction plays out. But the market is kind of saying that as well. When it comes to WTI, we do have momentum all the way up in the overbought zone, right up against resistance. So now it's about actually breaking. We got a direct test of that resistance, which is slightly above 115. It's about 115.50 to 115.25 for WTI. Now it's about, do we see a break above there? And if we do, then it's most likely going to go for 120 and above, potentially even up to 130. If we see it break out above there, we can look 140 to 150. But this is a big area of interest overhead. So seeing, some front running and then direct rejection right at it, and even a little bit of rejection of expansion into that area. Right now, not surprising. But if we do see a close above 115, that's re-expansion. So big expansion, compression, that'd be big expansion, likely looking towards that top side, 130, potentially even going above there to try and hit, 135 to 140 before the next major overhead resistance. And as long as WTI is trading, especially in the stronger area, which is above the actual open of the high side candle and the range high here between around 98 to 102.5, looking really strong, even stronger above the 105 to 110 area, right? But if we do start to see 98 break down, that's the basis now. Start looking back to 90 to 95. Very highly likely you're going to see bids come in there. And it's all about, does it hold up? Last higher low is at 96.5. It would be a trend break if it got below there, but beware of 90 to 95 on closes specifically. Not just swings down below or wicks down below, but closes specifically. If we do see a close below 90 to 95, start entertaining the next big area down here in the mid 80s, around that 84 to 86, 85 being the break point there. Anywhere below there. And I would expect the lower second to start working its way there if it looks anything like this. Otherwise, I'd start looking down towards 80 and then potentially 75 to 80 per barrel. That would be the big one. And right now, it's on higher highs with weakening RSI. So just, if you are bidding in this area as a trader, just be very, very careful. Be very, very careful and be quick to take profits if it does spike up. That's my suggestion, of course, not financial advice. I know that's what I would be doing. But let's go ahead and take a look at, actually, let's stay here. We're seeing gold did put in a downtrend break, right? So we had this big downtrend, last lower high did get run, and that was at 4,600, and we saw a move all the way to 4,550 or so. Now, if this is going to be a low, great. Anywhere below 4,500, this is going to fall apart, likely back down to 43, 44 pretty quickly, and then we can start entertaining 4K to 42. But if it sticks around this area, especially above around 4,500, above 48, we can start looking to $49 to $5,000. When looking at silver, silver did the same. It got a downtrend break, but it's not really in a strong position right now. It's all about holding up around $70 an ounce. And then if it can trade and close back above around 75 to $76, then we can start looking right towards 78 to 80 and potentially more up to around the $85 region. When looking at traditional markets, Dow, like I said last week, swung its highs, did not get a downtrend break. In my book, that's going to be above 46,712 here, 46,8. And then we can start looking to, really accelerate towards, around 47 to potentially even 47.5 in here. Now, yesterday's swing low at 45.9, realistically back below 46, 2 to 3 at the top side of this major weekly, start looking right to that 46 to 45.9 area. If it's lost, yes, it can swing down to, the 45.7, 45.750 area, but realistically, it's going to look like it's going to want to come down to 45.5. And potentially more to retest the lows around 45, where the lower second is. It's all about now taking out the high from Wednesday of last week, and that was the April 1st high at 46.8, and of course getting closes above the lower high at that 46.7. So I want to see closes essentially that can break the downtrend on a closing basis, and then take out that 46.8 to start testing 47 to 47.5 or so. NASDAQ, trying to recover the weekly. It swung above at that 24.2, right where the basis band is, has a bit further to go. 24,465 to 24.5 is going to be the area that I need to see break to start looking to the upper first, somewhere around 24.7 to 8, and then potentially going for the 24.9 to 25K. Otherwise, back below 24K, look towards 23, 7 to 8. If it drops that area, it can swing down below, but if it drops on a close, pay very close attention to this low from Thursday last week. And that's going to be right around 23.5. Anywhere below there, we're looking right back to 23. SPY. Is it going to load? There we go. SPY did get its close above the weekly level and the basis band. Now, it closed at 658, so just slightly above the weekly level here. It is within, within an area where it can start to hit that 660, 662 to get the downtrend break and start testing 665 to 670 area by the upper first and this red line that I have there. But again, back below 657, playing in that 10-point range at the weekly level between, even now where the lower first is, right around 645 to 657, big 10-point, 11-point range there. Anywhere below the 645 range, we're looking right back down into the mid 630s to 630 even, and for a retest even possibly of the low around the upper 627, 628 region. Need to see downtrend breaks. Doesn't do much for the wider trend on longer term timeframes, but it would start to, at least give us very clear criteria for continuation to the downside or a potential consolidation, and then we can see which direction things pick later. And that's pretty much all I got for you. I know not too much on the weeklies right now. It's more about watching these dailies and seeing what kind of price structure can be carved out, and then we can evaluate the weeklies from there. And Yeah, I really do believe that if you're watching oil, um, and the direction that oil is headed for WTI specifically on the down day, what did we get? A down day in Dixie. We got a little bit of a gap up open for Dixie now that oil has kind of, stuck around, hasn't really done too much as of right now after open. And, we'll see when the market really gets rolling tomorrow, kind of what things look like. Obviously, there's some news that the market is waiting for in terms of action that could potentially be taken in the Middle East. Realistically, when it comes to the markets are bidding the spread right now. So they're bidding and asking on a spread basis. So a lot of this was retests of major weekly levels that were lost prior. So just be careful around these levels on the way back up if it does continue to push up. And if you see Dixie trading back above, 140 cents, pay attention to the 164-cent region, anywhere above there, 101 to 102, and potentially on an expansion, because this is a compression right now. I'd be looking all the way up 103 and potentially even more. Now, of course, that would be oil also likely ripping back into the 115 to 130 macro overhead resistance and potentially more. Anywhere below the 99.30 level, start paying attention to this low side structure around 98.90 to 99 as a potential area that could hold up around that lower second. If it does lose it, we're getting expansion to the next area right around the low there at 98.50, and then it's very highly likely going to go for more. That would be oil starting to break down towards that 90 to 95 level and potentially getting under there. And then we can start looking all the way back down to 98 and potentially lower. That would provide for some nice relief in markets, and likely a rotation back into risk. You can tell that the markets want that risk at some of these levels as well. With that early rotation into risk today, and then right back out towards the end of the session as oil was started to move back up towards the end of the session. So that's all I got for you today. You have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. Like and share this out there. And I will talk to you again in recorded format like this on Wednesday for the Wednesday check-in. I will not be on David's show tomorrow, the breakdown at 12:15, but I will be on the Wednesday show at 12:15 p.m. Eastern with him to break down markets, talk the normal stuff that we talk about, considering what's going on politically and in the Middle East as it relates to macroeconomics, and then of course, some of my opinion about things and how things are going. So if you do enjoy that, I'll be back there on Wednesday, but don't miss David's show tomorrow on Tuesday either. And I'll be back at you here on Wednesday at 9 p.m. Eastern, 6 p.m. Pacific Standard Time. You have a wonderful one. And with all of that said, Landy out. Take care.